Hey ladies and gentlemen, welcome back to the channel. As always, it is Nick here back with your daily crypto news and analysis, and today we're going to be talking about Ripple and Quant. So let's just dive in and let's talk about a few things. But before we officially start, I just want to ask guys to hit that like button. It does help the channel grow immensely, and of course I always do greatly appreciate it. So first off, I've been talking to you guys about Xrp and Qnt for a very long time. Obviously, these are tokens that are utilized on these networks for various reasons. And I honestly think that when we look at the spectrum behind DLTs and specifically even settlement and things like that, a lot of these DLTs in terms of technological advancements are going to be adopted in at full scale moving forward. We are seeing timelines being thrown out there. We're seeing, a 4-year timeline, 5-year timeline, etc., being thrown out there to understand where we currently are positioned in terms of the adoption stages of this technology. And I do foresee, when we look at Quant and even Ripple, these are two companies that are focused on, the variety of efficiencies that could be unlocked through crypto technology. This is also why I do pay attention to XRP as a token and also Qnt as a token, because, XRP as a token is a little bit different than Qnt, right? Because XRP is utilized to unlock, vast efficiencies when utilizing, the Ripple network. I also look at Qnt in a same, sort of spectrum, except Qnt relies, in terms of the value behind Qnt, it relies on the value that is driven across the Overledger network. Because as more and more demand grows for the Overledger network, the more and more that the price drastically increases for Qnt as a token. Reasoning for this is because those enterprise grade and institutional grade users that are adopting the Overledger network for, again, interoperability and use of the digital technology, aka DLTs, they have to also hold Qnt as a token and transact with Qnt as a token. It's almost in the same structure as like on-demand liquidity and things like that. If you want to free up working capital and stuff like that with RippleNet, you would need to utilize XRP, which is also why I've said it's a no-brainer move for these institutional players to utilize XRP, because they do save a lot more in terms of percentage on fees, and also they do unlock massive efficiencies like instant settlement and stuff like that. But with that in mind, let's move on and let's talk about a few things. So first and foremost, I talked to you guys a little bit about where Ripple is positioned at in terms of their institutional grade clients. This is just one of many case studies that Ripple does have. And the reason why I bring this up, and the only reason why I want to talk to you guys about this, because I've talked to you guys about Money Match in the past, is because you look at the savings that these clients can get with just utilizing RippleNet. For example, they reduced their global transfer costs by as much as 40% and provided their customers with same-day settlements. Now, this is pretty significant. I mean, this is something that is definitely huge, especially if you are, an institutional grade client. I mean, saving 40%, even if you're not an institutional grade client, 40% is a significant savings. But when we look around this, right? Think about it like this. This is just utilizing RippleNet. This is actually not even including XRP. And the reason why I know that is because if they included XRP, it would be 60+% savings, and it would be instant settlement instead of same-day settlement, which I know is still it's drastically increased in terms of the legacy system. But we want to get to the point where XRP is actually being utilized. Right now, there's not a major demand for XRP as a token. I know that we did do 25% of on-demand liquidity volume in 2021. But that's not a drastic increase right now. We need a lot more demand around not only RippleNet, but also RippleNet combined with XRP. When we foresee that happen, which I do believe that is going to be happening once we do see regulatory clarity around crypto, then we do see the true value behind this technology being unlocked. We also look at the idea on, all of the money, which I will also talk to you guys about later on in this video. Now, in terms of, the true value around a lot of these networks, specifically like if you're looking at the XRP ledger, I've always said that these DLTs are extremely vital for the future of finance, because they also allow the unlocking of a private ledger, right? Where you will see central banks moving to a private ledger to issue a CBDC or even issue a stablecoin, which we will also address, on these private ledgers to have full, and 100% control over. That way they have the option of, one, burning supply, minting supply, and even moving that token itself, or if you will, CBDC, around. So having full control over that is important for the central banks, and that will actually give them full control without stifling the centralization of the actual ledger itself. Now, we do see here that, in the recent survey of 1,600 financial leaders across 22 countries, 85% of payment leaders at financial institutions globally think their country will launch a digital currency in the next 4 years. This is actually pretty significant. I mean, think about it like this, right? By 2026, how different will crypto actually be? In my opinion, by 2026, this entire market is going to be extremely different. You got to remember that we added $1 trillion in market capitalization in just one quarter back in 2021. So think about how fast things will actually move by 2026. Things are definitely going to be very interesting, especially as we do see more and more talks around CBDC, stablecoins, DLTs, and just real-time settlement, because you're not achieving real-time settlement throughout really anything other than crypto technology. But we also do see key use cases around CBDCs. You guys could see the use cases being unlocked. I mean, first off, financial inclusion has always been a spotlight here, but you really kind of look at cross-border payments, peer-to-peer loans, and also even credit history and things like that. That's also why we look at like line of credit through SMEs with Ripple as well. Of course, there's a lot of things to really kind of look at. I mean, you do see identity, offline access, security, and also I'm pretty sure that interoperability, in my opinion, is definitely one of the biggest barriers to adoption of this, in my opinion at least, because we've been seeing a lot of individuals, specifically even high tier elitist at these major companies like even the BIS and MasterCard mentioning interoperability. When we look at that, we really kind of streamline the conversation to Quant, because I do believe that Quant is going to be the interoperability giant going forward. Now, in terms of stablecoins, right? So I do foresee like these timelines, like this 4-year timeline in terms of launching like a digital currency, is most likely going to be streamlined by regulations. And when we talk about regulations, things like the Terra collapse, really kind of streamlines regulation talk around crypto. And I do believe that we will see a regulatory demand around crypto, and a full-on confirmation of regulatory clarity by around the end of this year. We should have regulations in mind, though, when we talk about crypto, that further innovation. We don't want stifling innovation, and we don't want over-regulation around crypto either. So when we are talking about crypto regulation, I think that this, UST Luna situation was definitely something to bring in, very strict regulations, which if you guys, pay attention to regulations in general, you don't want things that are over-regulating crypto, because it actually could kill what crypto could essentially blossom into, which in my opinion is going to be a massive asset class. And also when we talk about crypto in general in terms of technology, I think that the potential around crypto is massive. I honestly, I've always said when we look at the efficiencies being unlocked through something like even Ripple with XRP, that's something that you are not getting anywhere else in terms of freeing up working capital, aka getting rid of the Nostro accounts. Now, of course, even KPMG, which is a large bank, has been talking about DLT technology and basically talking about where this could really, sit on, of course, the pedestal going forward in terms of mainstream financial institutional adoption. We do see here for mainstream financial institutions, the true value of crypto innovations appears to lie within the underlying technology rather than the crypto assets themselves. More specifically, it is likely to be in permission chains, which eliminate many of the inefficiencies presented by the legacy systems today, the settlement systems. Which, again, we still see the idea of DLTs being the focus point. Of course, they are talking about regulatory demands and, meeting those demands. But you also do see the benefits here. Near instant settlement eliminates data silos and the processing gap between front and back office functions, therefore increasing the speed of settlement, especially across borders. Near instant settlement also materially reduces settlement risk and associated cash buffers firms are required to hold, freeing up capital to be used elsewhere. Having one immutable version of each client record reduces frictions experienced in client onboarding and creates the potential for vastly improved relationship management processes, which again, all of this is significant, efficiencies being met. Again, I've always said that when we look at DLTs are definitely going to be the future here, but also so are, interoperability bridges, which is why I've always said Quant will definitely be, a major player here as DLTs do get adopted fully in, and we're going to be talking about that here shortly. So, again, what are the challenges? There's so many, challenges around this specifically, but I do think that, when we look at the challenges that are essentially being fixed right now, we do see here, the creation of multiple alternative ledgers could also, cause greater fragmentation while within the existing ecosystem if there is insufficient interoperability. Interoperability is definitely one of the key factors here, which is again why I've always said, pay attention to Quant. Quant is doing some pretty huge things in terms of interoperability, and I've always said with their DLNs, specifically around DLTs, that's something that you want to focus on because that distributed ledger network that's going to connect all of the DLTs to one massive network, that's the key for success around the DLT space. So without that interoperability bridge, DLTs will essentially cease to exist. But we do see the case for commercial stablecoins as well. Quant's founder and CEO Gilbert Verdian argues that only a certain kind of stablecoin is fit for enterprise use. And that is, again, commercial stablecoins. It's not going to be around, UST and things like that. I think that the UST situation definitely, streamlined the idea of like, all right, where is, stablecoins really going to be positioned at here? So, again, we just here enter the commercial stablecoin. There are certain characteristics of a stablecoin that make it more suitable for B2B use by financial institutions and their enterprise customers. At Quant, we call these commercial stablecoins. These privately issued digital currencies backed by fiat or commodities will become an essential counterpoint to CBDCs issued by regulated private companies, financial institutions, and banks. Many are already live. One consumer-facing example, Circle's USDC, is now the 5th largest digital currency with a market value of $52 billion. Others include the USDF Consortium, an initiative by 10 FDIC insured U.S. banks to create a bank-minted stablecoin on a public blockchain. Another example is the DCJPY token, a yen-based digital currency pegged to bank deposits developed by a group of 70 Japanese companies and banks to speed large-scale fund transfers and intercompany settlements. When we talk about a lot of these, stablecoins, right? A commercial stablecoin is definitely something to really kind of look at because this is most likely going to be utilized for high-value, transactions. And when we look at something like the commercial stablecoin itself, this is going to be something that is not going to, measure up to a retail stablecoin, if you will, right? Which I've talked to you guys a little bit about in terms of, things happening around, financial institutions, bankers, and things like that. Something like this could definitely be, where we kind of pivot to. Instead of having a CBDC, we could just have these stablecoins. These stablecoins still unlock the efficiencies of what could be from a DLT or a CBDC, if you will, on a DLT, and really kind of unlock those efficiencies for these high-value, clients and high-value transactions. A commercial stablecoin still has the efficiencies of the network that it's basically, being built upon, or, if you will, issued on. Which, by the way, we did see just recently, going back to February, Stasis to issue Euro stablecoin on the XRP ledger. Again, you still see those efficiencies being met and unlocked. That is something that I'm very interested into watching unfold as well. But when we look at something like this from Quant, these commercial stablecoins are definitely something to focus on because these are still going to have, those efficiencies met. And it's going to also allow for massive amounts of money to flow over with these stablecoins. We do see here, much like in the early days of the internet, there is an interoperability limitation hindering the global use of commercial stablecoins. Today, they can only transact on the network they are initially issued on, which again is not a good way of transacting. This is where we do welcome the idea of Quant. Worse, they can only be redeemed for fiat with the bank or consortium member that minted them. And of course, blockchains and DLTs are limited in interconnectivity, making it difficult to move or transact stablecoins from one network to another. How then does the commercial stablecoin live up to its potential? The answer is threefold. Make it easy to issue, make it usable on any blockchain, and make it simple to redeem into fiat and vice versa. Once these factors are put into place, we are nearly there. We will see more enterprises embrace these innovative digital assets. Again, this is where I talked to you guys a little bit about where Quant's position. Quant is the interoperability bridge between the legacy systems and the DLT systems. This is why when we look at a commercial stablecoin, instead of a CBDC, I'd actually think that a commercial stablecoin is actually being pushed more now than ever in terms of CBDCs. Of course, do I believe that a CBDC will most likely make its way into the system? 100%. But I do think that these commercial stablecoins for right now are definitely the move, especially as we did see Circle's USDC get a ton of publicity from, again, BlackRock, Fidelity. A lot of these companies are moving in, and these are massive companies with $10 trillion plus under asset management. And when we look at things like that, right, you look at things being streamlined and why these major hedge funds and financial institutions are moving in on something like USDC, and it's simple. They are seeing the efficiencies of transacting with a stablecoin where you are almost at a feeless transaction and it is almost instant settlement. So when they see those efficiencies being unlocked, then you truly see the potential behind this, technology, which is why we also do see Quant mentioning commercial stablecoins here. Commercial stablecoins will most likely be, a major stepping stone for this market, but it's also going to be on almost the same level as a CBDC. So I definitely look forward to what Ripple and Quant are achieving here, because I do believe that Ripple is definitely playing a key part here, specifically even the XRP ledger, because again, stablecoins could be issued on almost any ledger out there, but the efficiencies are definitely something to really kind of look at. And we do see here, we're thrilled to support Stasis in bringing yours to the XRP ledger, whose decentralized exchange enables near instant low-cost settlement and liquidity for assets of all kind. Again, these ledgers, in terms of their efficiencies, matter greatly. So again, with that in mind, I definitely do think that Ripple and Quant are positioned for the future. I think that these are going to be giants in the future of the financial markets. And when we talk about the future financial system being built, I think that these are key players. So with that in mind, I hope that you guys enjoyed this video. If you guys did, definitely leave a like, subscribe to notifications on if you guys want more free content. You guys are more than welcome to follow me on Twitter and join the free Discord down in the description below. As always, up to you all. Have a beautiful day or beautiful night wherever you guys are in this beautiful world. It's been Nick. Peace out, guys.